Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday. It's May the 1st, 2012. We'll be looking at Toronto Stock Exchange, or the TSX. We're also going to look at the Russell 2000, but yesterday I covered all four major markets in the U.S., so I don't want to repeat that video, but I do want to recover or look again at the Russell 2000 Small Cap Index today. So after knowing this chart, I'll cover that one. Today we're going to be looking, like I said, at the Toronto Stock Exchange, and the main thing about this chart is I see a setup forming here that we want to be looking and to use as a bearish setup again. When we talked about this before, so it's a little bit early again, but I want to show it to you. Back here you had an opportunity. You see the hammer candlestick formation. You see the higher high of this candlestick versus this one, and the higher low of this one versus this one. So this was your confirmation here. You set the stop right there. You were a buyer here. You've had a few days to move to the upside, 5 to be exact. And each one of these has shown the same thing, a higher series of highs, a higher series of lows consistently. You want to keep advancing your stop to the low of every one of those candlesticks until eventually you're stopped out. Well, I think eventually is coming a lot sooner than some people think here. And the main thing at this overall trend is obviously down. So you want to be cautious when you see that. You have seen a potential reversal situation here. We've got a series of higher lows as the overall trend. Higher low. Let me clean that up so you can see that better. Sorry about that. You got a series of higher lows and higher highs from here and here. So it's a possible attempted reversal, but I don't think it's going to hold, and the main reason for that is this right here. You can see that the ultimate oscillator is showing the momentum from the high point here. It's trending higher now than it was back here. Well, when you look at this versus the price, you can actually pull down and see the current high point here versus the current high point now. You can see you're trending down. This is a bearish divergence. It's one of 4 types of divergences that are out there, and this one also calls for a move to the downside. What you're seeing here is price is actually unable to move higher. There's too much sell pressure here, so this is actually creating a situation where you're nice and overextended here. You've got plenty of move to go to the downside here before you get into the oversold territory. So I see a test of this low coming. Be cautious of that. You may see strength at the bottom, and we'll have to wait and see, but I wouldn't be expecting that. We've seen other markets already starting to break down, so I would expect this one to follow suit. You also notice your overall major trend here is still down, so there's nothing about this that I'm really all that bullish about. A couple other items about this chart we could discuss, and we've already mentioned that we saw the potential here for the short-term peak forming at this range. We talked about that because it was in line with the 50-day moving average, this red line right here. Whenever you're bullish and you're in a bullish uptrend, you're going to find support at that level. So when you pull back close to it and you find support there, it makes sense. You're still in that uptrend. Higher highs, higher lows, everything's fine. When you start closing below that, then things are starting to change. You're starting to see a change in the overall bullish trend to something else. We're not sure yet, but we're going to keep an eye on it, and then of course it starts to break down. And we talked about this being possible head and shoulders formation way back then, and she ended up being head and shoulders formation. She fell exactly like we said she would. But then you'll notice here, you close below it again, well, not actually there, here, and continue to do that until we started to find resistance there. When you pull up to it, you can't go above it, and you pull away from it. That tells you the trend has now changed. Back here, you were in a bullish uptrend. Now you're in a bearish downtrend. And where are you finding that resistance at again? The same exact level. So all these signs are telling you the same thing. You're in a downtrend now. It's a bearish market, not a bullish market. You're looking for short opportunities where you want to find overbought conditions, basically where the ultimate oscillator is up above the 70 line like it is now. Basically everything's telling you the same thing. Another item to look at is the fact that you've had 5 consecutive days to the upside. That's above average. Actually, it's a high end of average. Looking anywhere on this chart, you will not find 5 consecutive days to the upside. Typically, you'll see 3, 2, 4, that kind of thing. And then on occasion, you'll get an overextension, like a rubber band being pulled too far. It can do it, but eventually it's going to snap back. So keep an eye on this chart. Some people will actually take a short position now on this particular average here. You short it at this point, the stop way up here. That's a bit much on the risk side for me, so what I'd rather do is wait till I start to see it break down. You got a divergence in place, and that tells you it's going to fall apart. It can't sustain it. But at the same time, I like to wait for confirmation because we can still get a couple days to the upside before we roll over. So I'm just going to wait myself. The Russell 2000 Small Cap Index. This one we talked about yesterday along with several other major markets here in the U.S. Told you at that time we're very bearish on this chart, and this is the chart that I want to be most interested in the US for this week. It's got a lot of downside potential there. I like the risk reward ratio, so forth and so on. The main thing here is you got an overall bearish formation of a head and shoulders formation going on there. We've not actually confirmed that. You confirm it, you have to go look at this low point here and this low point here, and then you draw yourself a neckline right there. It's sloping down, telling you that it's a bearish signal here. It's a very strong bearish signal here. You won't actually have confirmation of that until you close below that neckline. So right now we're just seeing what looks like to us could be a head and shoulders formation, a market peaking signal. And we tried to take the opportunity yesterday as a short here. We talked about that. You could have been shorting today. The only thing we said we didn't like about this situation is we didn't have a shooting star. Well, today we do. We have a major wick coming out of the top of this candlestick formation right here. Just rallied all day and then sold it all off. That means that sell pressure is stronger than buy pressure, which shouldn't surprise you because we talked about this several times. But the main thing here is you've got resistance here, here, here. You broke through it, false breakout, false breakout, false breakout. Come up here again, and what do we find? Resistance at the same level that we've already seen before. That major sell pressure is still there. I want to short that because she can't break through it. One last item to note, tops don't always happen in a blink of an eye. Sometimes it takes some time to develop. Look at this high point here, and you start getting some wick out of the top here. It takes it a few days to develop before she starts to roll over. Then you get another push to the upside, then again, and then we break down. So just because you've seen a peak in a particular level doesn't mean it has to happen overnight. 1, 2, 3, 4, 5, there's several days of consecutive sideways moving activity. It's still topping, but it doesn't have to happen instantaneously. So keep that in mind for those of you who are trading options. Give yourself some time to let a top form and develop before you have to feel like I have to buy now and short now and so forth and so on. All right, just make sure you realize that tops take time to develop. We already covered the Russell 2000 Small Cap Index in yesterday's market analysis, but I will point this out again for those of you who might have missed it. You got the high point here, higher high here. Note the corresponding closes of the candlesticks here, and then lower here. So there's nothing here that's being bullish. In fact, you're getting another divergence, and this is a bearish setup telling you to look for short opportunity, and that's why I want to, again, get back into this one. Also got the major gap here and here. This gap's typically filled, so seeing a pullback down there would make a lot of sense to me. Now you know everything that I know about the Russell. It is a very bearish chart. If you're bullish, good luck to you. The rest of you guys, set your stops accordingly and play it smart. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. God bless, take care, enjoy your evening, and I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.